Yeah! Hey guys. Hey, welcome back to Stocktwits Community Rip Live. I'm Ben or Bags, whatever you want to call me. I've been called worse. Gotum G Paiza, Nick, and JFDI. We're starting the show early because we are already on fire. Hey GP, you want to just tell us what a great technical trade this was, or Nick, one of you two can say,
Pull,
"Oh my
pull,
God, this was so technical, and we knew this was going to happen."
pull up a chart of the Qs and let's flip flop between the daily and the monthly.
Well, I would love to do that. We're so early, I wasn't even prepared to do all that, but I'm pulling it up now. But hi guys, how are you? It's good to see you. Long time no see.
Yeah, too long.
All right, here it
Well,
comes.
as an AMD
I want to
shareholder, I'm
argue
going
my
to take
technical
victory
point.
for outperformance for a day. It doesn't happen very often. Everyone take a bow, take a bow, take a bow.
I love AMD.
Yeah, but it does not outperform NVIDIA on up days like this. So that's always something to take pleasure in, and then sorely get destroyed tomorrow. But that's a different conversation for tomorrow.
We're all sporting our Stocktwits merch too, by the way.
Yeah,
Go
yeah.
ahead and go to the shop, get you some merch. Nick,
All right, here we go.
QQQ. Here is the monthly for you.
Yeah, yeah.
There you go.
You can go back to the weekly real quick first.
You just tell me where to go and I'll drive us there.
All right, so on the weekly, I mean, it's probably a little bit more clear on the daily. Everybody saw the bear flag happening there right along the 50-day. Guys that were calling for
Right
an
here,
AB,
right? That's what
yes.
you're talking about, right there.
Yeah. So the measured move on that bear flag breaking is basically right there at 420. So we undercut the low of that measured move. Essentially, what we have forming here on the weekly is a piercing candle as it reclaimed that 120 floor, which that 120 floor, I'm sorry, the 420 floor, like you can extend that over and it extends. You zoom out to the monthly, and to GP's point, we're retesting that 2021 high, or not quite the, yeah. So
Yeah.
technically speaking, if you were playing the A, B, C, D leg down, you should have been covering into 420, because when those measured moves complete, you're typically expecting a reversal to happen, whether it's a sustainable hard bounce reversal or whatever it may be. You're just expecting a counter trend move there. So you should have been covering. If you go back down to the daily and then you look at some of the other, like just the other names that there's a lot of RS behind, you saw
Sorry,
a
Nick.
lot.
I'm just showing everybody on the screen that 420 right there. We kind of pictured. We picked it out previously, and then basically from there, the market went on down another 4.5%. That's all I wanted to show. Now back to the daily.
Yeah. So again, like you had to have been thinking, as nasty as this was, you had 400, the round number. You had 420, the completed leg of that measured move down. Whether or not this does sustain, and we ultimately like build something out, is to be determined. I've been thinking that we're going to build out like an inverse head and shoulders here. I shared that chart on Stocktwits earlier, and I have it several times now, but the way I'm looking at this is like, as long as these moves are tradable.
So something like this, Nick?
Yeah. Yep. Totally.
Yeah, sorry, go ahead. I'm just clarifying what you're saying.
Yeah, I don't know where I was going with that, but I just wanted to argue the technical side of it. Not saying that it was an easy trade to necessarily, let's say, being long going into today, but at the very least, as of today, should be throwing some risk on. I mean,
sure.
Why not? I guess, yeah. I mean, again, and to kind of what you had been saying before, like the next time something pops, whether it's him tweeting or whatnot, and we do roll over, that's going to be the determining factor. Like, are we going to put in that higher low and create that right shoulder? Or are we going to head back down? with this high volume low, there's a good chance we end up retesting this low at some point too. So there's a lot of possibilities, and I think you need to have your if thens written out and trade the.
So before, and
Yeah.
GP, you can tear this apart after I say this. Before what 30, 45 minutes ago, we were sort of flattish, right? No, we weren't flat. Like, how high were we up before the tweet?
I don't care about the Qs, but look at the underneath, right? Apple was leading, Nvidia was leading,
Microsoft was.
Microsoft was leading. Like we might have been flat on the indices, but there was a lot of names showing strength.
When
underneath.
someone's referring to the market, are they referring to the Nasdaq 100 or the S&P 500? Or are they talking about individual names?
I feel like they're talking about their accounts usually, but that's a different conversation.
Well, they're talking about a broad basket, not selected names, right?
Mm-hmm.
Is that fair?
Yep.
So we were right around here on the S&P before that happened, somewhere through here. I'm saying it's not technical because if there had not been a tweet, right, then we would have probably been languishing still in this range. I mean, we'll obviously never know now, but all things considered, we're probably doing this.
Yeah.
Right. And to just go like that out of nowhere is not a technical trade. I get, Nick, what you're saying and where the technicals came from and what you were looking at. Remember last show, I even said that I think we're going to be higher from where we left. We're currently down 5% from a 15% drawdown after our show last week, which no big deal, right? Big deal. It's down 5%. We're not up. But yes, I was putting money to work too, but I'm not going to go out here and say this was all based on what the chart is showing me because it's not. It's how many times do you get a 15% down week that you can buy into. And unless you think the world is ending, which I don't think the world's ending, you kind of got to buy something. You're so oversold, you kind of got to buy something.
Yeah.
He's speechless.
I mean, I kind of, it's to your email earlier, guilty till proven innocent. I'm kind of, if there's one thing that like 2022 really taught me, it was wait until the market's rewarding you to be aggressive, to get aggressive. Like my P&L would have been significantly different had I just had I not pressed it versus gotten aggressive when certain levels got taken out. But
sure, I'm not disputing to not put money to work. That's not at all what I'm saying. I'm just saying that we're currently, the market is currently ruled by tweet. A tweet could come out tomorrow or this evening and totally undo everything that was done over the last 45 minutes.
I don't like that the moving averages on my weekly are still all pointing down, and the fact that that's happening.
It's still not pretty.
Yeah, it's not pretty, and so optimistically, I want to see an inverse, head and shoulders bill out, but I'd almost agree that we could end up having a 400 to 500 range on the Qs for another 6 to 8 months. If you look at like, let's say 08, look at any of these major corrections where we had a major pulling off the highs. We spent like even 2022, like we spent how many we spent half a year going sideways. So I don't know where I was going with that, but
go ahead, GP. You have been the quiet one for the first.
Yeah, I know. It's
So I'm just listening, right? Because what I would say, Ben, is we haven't been technical, which is why a lot of the charts I've posted have not been working. It's been constant. It's like someone underneath was liquidating, or there's flows, or whatever was going on. Tweet after tweet, there was like literally nothing. The one thing I noticed this week, that's why I was posting a little bit more on the volatility candle, right? That Monday volatility candle, it was a 10% range. And we've talked about this many times before. When you get volatility, it happens at the top and the bottom. And so you have this volatility candle and you have well-defined pivots to kind of trade from. We did not break it yesterday. We did not break it to the downside or the upside. With the amount of reversal that we got intraday yesterday, you would have end overnight, you would have expected that candle to get absolutely hammered. And so technically nothing has been working, which is why all my charts, just I'm a technical trader, right? It hasn't been working. It breaks. You gotta readjust, right? It's like, oh, redraw lines. No shit. I gotta redraw lines because where I think things are gonna
exactly.
happen.
Yeah,
What's that?
that's what the lines are to manage your risk. So like, yeah, I've got to redraw the lines.
Right. So like when something, so we've talked about this so many times over. Is I'm a probabilities guy. I think we all are for the most part, right? So if you draw a line, the probability of entering a trade and getting a very low stop out rate, 1 to 5%, depending on that, is worth the effort, because if you're wrong, you miss out on days like this, right? And so technically it actually started working this week, which it hasn't worked in 8 weeks now, right? And so why did it stop working? I figured if you're going to find a place to bounce, the 2021 highs, the trend line from COVID to 2022 COVID lows to 2022 lows to current lows, all coinciding together. You have the 200 week, which is still rising. You may talk about the 9, the 20, the 50, which is also not down. The 50 is flattening, but you have a rising 200 week, 150 week, 120 week, 100 week, and all these things that are pointing up. Your bias should be to the upside in general, right? If we start breaking those and rejecting them, then that's a different conversation, but we haven't. So to me, it was technical because the amount of confluences there were. We broke the August pivot, reclaimed it immediately on Monday. That was one of the first telltale signs for me that, okay, well, this market is now finding people to buy, right? And I talked about this in NVIDIA. When it breaks the August lows, this was back in November, which it broke this week, it's time to get long, right? Or look to get long. And that's exactly what's happened here. And so to me, it was still technical. I understand a tweet can change it. But what I was also pointing today was, for the first time in weeks, months almost, we saw put sellers in some of our really key fundamental names. I posted it this morning, which was Apple June 150 puts. They sold over $10,000 at a little over $6 a piece, telling you that you can probably get long in this area with tight stops and be okay until June. I'm expecting news and tweets and stuff to probably start changing to the bearish side again in end of May, June timeframe, right? So that's kind of my expectations here based on the flow that I'm seeing. And so what we've always talked about is these corrections, as abnormal as they have become normal as well, are all reasons to get long and potentially get long the future until moving averages start to point down. Does that mean your PayPal is going to do well? No, you may get an intraday bounce, but the PayPal chart is broken on every single time frame. But the thing for me here is we always need a secondary catalyst. A secondary catalyst won't be tariffs, in my opinion. That's the knowns now. It has to be an outright trade war, right? Like China coming out mid-May and being like, you know what? We're not even in the position of negotiating. We just don't care anymore, right? And we're going to go. That's the secondary catalyst. I would be like, wow, okay, that's huge. But more tariffs, whether it's 50%, 100%, 200, 5,000%, it's arbitrary, in my opinion. But that's all it is. And so you have to
This kind of
these levels that you're trading against are great places to get long because your risk is minimized. And on the upside, you shouldn't be selling, but you should be watching for reversals at key pivots above, right? Because just because it gets to a pivot doesn't mean it's going to have a secondary catalyst. We've seen a lot of these, COVID being a great example. But the best example I can give you is 2015, 2016. And we've talked about this before we entered the Stocktwits universe. We talked about this on our own podcast, it's the consolidation at the 100% extension of the SPX. The drawdown was a lot worse than I thought it was going to be. I thought the 78 retracement would have held like it did in 2015, but the drawdown percentage in 2015 was 25.9%. This week's drawdown, 25.6%.
I'm not saying anybody should have been selling down here.
Yeah.
Not at all. I think once you've gone through what we've have to happen over the 6 weeks, more recently, you should have been a seller a long time ago. And I'm not going to go back to say you should have been selling the tops. But Nick, you're the king of the trail stop.
Yeah.
How many times has that saved you just by saying, this is the maximum pain that I'm going to reach on whatever I'm holding?
I mean, all the time. It's the sucky thing about trail stopping is you have to understand that you're never going to go out at P&L all-time highs unless you're an investor that is selling on the way up. So by the time, if you end up getting stopped out even on like small runners, you're going to be in a drawdown, and it sucks to go to fucking cash or be pushed into cash when you're in the midst of a drawdown. But that's just kind of the nature of the beast.
Well, you'd rather be in cash in a drawdown and take small losses than all of a sudden
totally.
those positions being 15, 20, 30 or more % down, right?
Yeah, the other hard part about it is when you go into a drawdown, and especially getting trail stopped out, you have a tendency. There's an initial period where it's real easy to overtrade. Because like some positions might be getting stopped out, others might not. Other setups, just in the midst of volatility and the pullback, you're like, oh, maybe I'll throw a little cash to work here. And then, yeah, it's kind of death by 1,000 cuts. You've got to be really on top of seeing whether or not, like, yeah, you're getting chopped up. Like, are your little darts that you're throwing out there, are they being rewarded? If they're not being rewarded, you got to sit on your hands. So otherwise, it just, yeah, the drawdown compounds, and that fucking sucks.
You know, there was two non-technical things that also stood out to me. I was at a Sweet 16 this weekend for one of my friends, and I could not find a single person who wanted to be long the markets.
Oh, dude.
I love anecdotal evidence.
Huh?
Yeah.
I love anecdotal evidence.
Yeah. So that was like, oh, and then yesterday was like the nail in the coffin when a Stocktwits user decided to call me Tom Lee of Stocktwits. I was like, yep. When people get so brash in their ways of being so confident about things, those are just all anecdotal evidences, right? So technically, I still think it looks great. I think.
Dude, this is the biggest bar I've ever seen.
It's huge.
We're up 10.3%, and I understand the one thing that everyone will talk about is bear markets produce the biggest rallies, right? And that's a valid point. But you have well-defined. So I was talking to my cousin before I got onto this podcast, and he's like, "What do you think I should do? Should I get long here or not?" And my advice to him is watch where the weekly closes, right? And at this point, if you're not already long, this is not the time to fire bazookas. Yeah. Yes, can it go higher? But we talked about this. I think I posted it earlier in the week. You know what a great trade was? Selling Q350 puts for next week. They were going for over $2.50 a piece, right? That was as free money as you can get, because 350 is a huge technical level. That if you're along the Qs from that level, it's not terrible, right?
I was selling $9 Soxel.
Yeah, like there. So if you were at some point in this market thinking, how do I get long without establishing a lot of risk? I think one of the best ways to do it, especially if you're risk averse, is selling puts. VIX was at 54, right? Selling puts to get long in names that you want to be for long term, right? Qs at 343 implies what? A 40% move down, 37% move down. And we've talked about this many times. 35 to 40% is around the range for a lot of these big ass corrections, and if they don't materialize with a secondary catalyst, they're great buying opportunities.
Yes, Nick. I'm going to send you the chat link. And hey, while we're taking this brief pause, let's talk about the Hashtag Awards coming up here for Stocktwits. Where's my screen share button? Somewhere here. There it is. I'll find it in a minute. There we go. Pow! Hashtag Awards in New York, Wednesday, April 30th. Come on down if you're in the greater New York metro area. GP, you're going to be there, right?
I'll be in attendance. Come on down, join us. Have
Go
a couple
say
of
hi
drinks.
to GP. Tickets are available. It's at the stand at Union Square. You want more information, go to hashtag.stocktwits.com. And you can see all the amazing things. The award voting is over. We'll see how all that finalized. I don't know if it's 100% fan vote because that has wrapped up. But there we go. Here's the awards page. And if it'll load, there we go. NVIDIA's the stock of the year, or hashtag of the year so far, et cetera, et cetera, et cetera. So you can go find all that on your own at stocktwits.com/awards. But for the tickets to the show, Wednesday, April 30th at 6 p.m., go to hashtag.stocktwits.com.
Yeah, I would love to meet anyone who could attend. It would be awesome, right?
Yeah.
We'll grab some drinks. We'll hang out. Talk markets, of course. But we can also talk the Knicks because it's playoff time.
Yeah. How about your Knickerbockers?
Dude, we can talk about that another day.
No, I hey, I think the NBA and basketball is good when the Knicks are good, so I'm not mad about it.
There's an entire FinTwit universe where they want to fire the coach, having the fifth best record in the league in back-to-back 50 seasons. I'm like, you guys are just, if you've been a Knicks fan for as long as I have, back-to-back 50 seasons, it's been 30 years!
Brother, if Mike Malone can get it like he got it yesterday with the Nuggets, anybody can get it.
No way. Jalen Brunson is his godson.
I'm not saying he should. I'm just saying if Mike Malone can get fired, anybody can get fired.
It's not, you know what? I don't like Dolan much, but I'll give it to Dolan. That's not the type of disrespect he ever does to people, in my opinion, right? Like, he values those relationships. So I think that's, and Leon Rose is the same way. So
all right, let's get back to the markets. We took care of business. Hey Nick, what are you looking at on the screen there?
Dude, I mean, everything.
You're just in awe of the trampoline bounce we're having here. I'm waiting on a text from Nasty Nate to be, see, I told you, Trump economy or something. That's what I'm getting ready to get from Nate.
Yo, he's got to win midterms, right? So, like, I know he doesn't care as much, but winning midterms and being able to establish his policies is important to him.
Hey, I think we all put money to work over the past week to 2 weeks, right? We all got long some stuff.
Yeah.
Nick, go first. What name one or two things that you got long on?
Tesla, Palantir, and Lifetime Holdings,
LTH.
LTH.
Let's look at Elon first.
So there's your double bottom that we were talking about earlier. So that won't actually confirm until we rip 300. Yep. So there's your add point.
You know what's, before you go on to the next one, you know what the crazy part about this whole Tesla move is? It still has not filled the earnings gap. Non-stop selling and weakness since December 18th, and it got within 60 or 70 cents of the earnings gap, and it did not fill. I don't understand it, but just a little tidbit. $213.65 was the the pre-earnings close, and you thought what it would have. Anyway, go ahead, Nick. Go ahead.
Yeah, so Tesla, Palantir, Lifetime is obviously my favorite. Some hymns. I think there's a problem.
You dabbled in several things.
Yeah, I'm trying to claw my way out of a drawdown.
Palantir. Palantir was a name that I was in a long time ago, and I think GP, our conversation about the class structure probably shooed me out of it way earlier. Not blaming you, that's my own bias. But I think holding this 90 area is great for Palantir here. You've got this is one of the names, GP, that you may not have been referring to, but this is one that looks good underneath, right? Just recently added to the NASDAQ 100, right? And now we don't have anything rolling over, any of these moving averages on the weekly moving over. You just went back above the 9. I think that looks like a solid chart if this continues in a bullish manner.
So I actually don't like Palantir here. To me, okay, for the daily, so it's like semi head and shoulders pattern playing out straight into the 50 SMA. If we don't reclaim it here today or by the end of the week, I would say it's potentially setting up for a head and shoulders pattern. Not saying it will. I know it's a cult stock. It does really well, so I stay away from shorting or any of these names. I was actually talking about this morning is like, even with this market and the way it was looking, Palantir doesn't look, it needs to consolidate, in my opinion. If it consolidates, it's going to have a much better, much more sustained move. If it keeps pushing here, you're going to run out of liquidity and you're going to run out of moves higher. So Palantir, for me, is not on my list of things I want to be long. It can go. I'm not saying it won't, but
if you're not long already, it's one that I would definitely have alerts set at, like, let's just say 70, 75, because if the market rolls and this thing does exhibit that relative strength, it's likely going to find buyers as it pulls into that floor. Or, maybe to your point, maybe the head and shoulders ends up playing out. But then at the same time, if the head and shoulders plays out, that 65, 70 is still going to be that floor that you want to see price reclaim.
Yeah.
I like it above 88 up to 100. That's 12%.
Yeah.
So if 12% is not a good trade for you, I don't know.
But here's where it is for me on the monthly. If you go to the monthly, you see that outside volatility candle, right? Mm-hmm. Big range doji. Yep. That was on decent volume too. So it just doesn't it marks a shift, it marks a trend change on the largest time frame that I watch. So I think it personally needs to come down. Honestly, I would like to see 40, but it's a cult stock, so 58 could be potentially an area that it comes down to. Like I said, I'm not rooting against it. I just want to see. It's had such an insane move. It's really expensive, so growing into the valuation and consolidation would be a welcome sight for any long-term shareholders, in my opinion. But that's me.
Yeah, I think you risk 3 to win 9, so that's a 3 to 1. I kind of like those odds.
Yeah. And so this similar thing also exists with Hood. I know Hood's crushing it, but on the monthly time frame, major volatility candle on blowout volume.
Would you rather be in Hood or Coin? Well, I think I probably know your answer, but
I would rather be in Coin, but that is one miserable piece of crap. And yes, I'm in it. I'm getting slammed. There's no arguments there. I still love it on the larger time frames. Monthly still looks really good to me on Coin, even though it's miserable as hell. There's been no large volume blowouts on any of these moves. There's no volatility candles that I see, just steady grinding up and down. So um, I like it
Nick,
personally.
I'd probably take Hood. I mean, I'm long coin from the 50s, so I'm not just throwing that out. But if I were to establish a new position or put money to work, I would take Hood.
But yeah.
Fair enough.
What
What'd you
else?
put to work, Ben?
I bought some Soxel at the lows. I couldn't believe I got some Soxel under $10. I was thrilled. So I actually sold some puts last week to open, and then I bought some common shares on Monday, and those are up nicely. So I was a little bit concerned about the shakeout once it got down to 7 because I was buying 8s and 9s as much as I can. And when it got down to 7, I got a little squeamish, but I held tight. I didn't move. But now, I mean that. Let's just say my average on those are 850. I mean, 40% on maybe 10% of the cash that I had available. So I feel pretty good about that. And I bought some more Broadcom. So I went heavy chips.
Makes
And
sense.
again, Monday, that was the plan was, let Friday happen and then see what happened on Monday. I got in around 150 on Monday after I saw it starting to come up a little bit. So I bought back in around 150 right there. As far as technically why, no,
How
no
how
technical
high
reason. That was
how
just
high
my
did your
block points.
how high did your cash levels get, Ben?
I was over 60% cash.
Cash. Okay. How much have you
Before
put?
before the February 19th. I put roughly more than a quarter of that already back to work.
Back to work? Okay.
So I
Yeah, I
still
don't really
probably
get
have
past 30.
I still probably have what is that about 35% still something like that.
Okay.
In my long-term investment accounts, I don't typically get past more than 35% cash um, until there is a decisive break in the long-term bull market, right? Um, that's that's just kind of how I see it. Everyone does it differently. Things that I got long, Ben, you were
Yes,
asking a
please.
question.
Yes.
So obviously, I got long Tesla because every opportunity under that S&P area is fantastic. That which is 220.59. Um, you can criticize me for not selling any at 488. I don't really care. It's a long-term hold. Has been a long-term hold. Uh, if you're, do I have failed trades on it all the time? That shit moves like crap. But it moves like crack, and like that's we've talked about this before, right? Oh, Tesla's up 10% or it's going to go down 10%. I'm like, yeah, what's your point? Literally, that's almost every intraday since the beginning of time. Um, but long Tesla, long AMD, long HIMS. So I talked about this
Oh,
last,
I
I
bought
think.
some AMD too. Sorry, my bad. You reminded me I bought AMD too.
So like AMD is the only one I bought that has all crappy moving averages, right? I just fundamentally actually think it's fairly cheap. Can it go lower? And this was the plan, right? We buy in three tranches, 120s, 90s, and 75, right? So well established, talked about this when I first talked about AMD and didn't think I would get the 75s, but there they came. Um, so that's the other thing I asked this question is like, what's your plan, right? And Ben, you had mentioned something along, you should have already had a plan, and that AMD trade is exactly the plan, right? Like, I knew where I wanted to buy, and those were the levels. And so if they hold, great. If they don't, I have another batch to add to it. And so, and I bought coin.
I was really hand wringing. I just mentioned the names that were new, and Broadcom's newish as I bought it over the last 2 weeks. Soxel, I'd been out of that position for a while, so I bought some of that. But yes, I added some more to AMD as well. I was really hand wringing on what I wanted to add more to. And I felt like with the semiconductors getting hit hardest, maybe they will also bounce back harder since semiconductor was basically not in the tariff game, even though you would have thought that they were the primary thing getting knocked the hell out by tariffs. So I felt some security in buying semiconductors, but it would have been between Amazon and some Roblox would have been the other two I would have consolidated into had I bought existing names.
Yeah, I'm happy you did. I'm happy if anyone else did. If you didn't, I understand why too. Like, this is we we discuss this a lot, which is when the moving averages that are rising come into play, no one ever wants to buy. Never, right? And it could be tweet related, it could be everything related, but when they come, they came in 2022, they came in 2020, they're coming, they're in here now. No one wants to buy. I think you have when you have well-established pivots, you have to put some money to work.
I
Or
don't
you
know.
get jaded ultimately, right? I love the markets, and you will see that in the animation in my voice every week. If I'm not animated, something has drastically changed. Um, I love it. This is the stuff that makes. And then so the one other part of this conversation, Ben, is that when things aren't working, right? It's okay to just do nothing. I haven't done
Yeah.
much in a couple weeks, right? And so I tried small trades here at key pivot levels, and I'm talking about like really small trades. Not gonna cry myself to sleep on a small trade not working out. It's you got to do these to assess the market. It's the only way you can feel what's going on in the markets. My
Yeah.
personal opinion.
Yeah, it is. You throw a test buy on there. Like one of my tells is like, let's say I'll throw a bunch of test buys out there, and dude, like if I'm in like immediate losers, I'm like, dude, this just ain't, it just ain't working.
It's hard.
Yeah, like, but the market, like generally speaking, like the market speaks to you though. It's just a matter of whether or not you listen to it, and it's like if it's working, it's working. If it's not, yeah,
Yeah.
GB, I said I was doing some hand wringing. I was also, on my Soxel buy. I was thinking about some of these other names. The top of my weekly watch list right here: Dollar General, Reddit, Zscaler, and ServiceNow. Um, I was like, I really like these names, but then when I looked at my long list, it's like I don't, and not all these are longs. I can take some of them out. Once I looked at my long list, I was like, I'm going to be back up to 9, 10 names. Do I really want to do that?
yeah,
And the answer ultimately is no. I don't want to do that. So while there are names that I like and kind of, it's not or I don't know what the opposite of buyer's remorse would be, right? Like you're window shopping and you're like, oh, I really would like to have that, but you never buy it. That's kind of what it is, I guess, with these four for me right now.
Yeah. Yeah, there's a lot of names that got beat up, right? And so how do you decipher what you want to be long? And that's the ultimate question. Like, then the ultimate question is that answers is you got to do the work, right? You got to see the moving averages, you got to see the technical piece, you got to see where the fundamentals are, right? There's stuff that's happening that it's important, and so having the technicals is not a be like it's not a tool that tells you exactly where the bottoms are. It doesn't tell you where the exact tops are, but it gives you probability, right? And the probability that in this market, this is how we're going to approach this. And long-term moving averages that are trending up tend to be really good buying spots. The one thing I will say is the more times you test that rising moving average, it will break. And when that breaks, I think you're going to have, and then if you see it turning down, is when you can probably say this is going to be a long-term bear market. It's not there yet, and that's what I will say. Like we've had nuts. The moves that we have these days are just absolutely bananas. I would like to just go back to the flash crash days. You get a 1 day 1,000 point down, done over, instead of this rolling um, shank in the side of the gut all day long. So because this ultimately creates a terrible mental state for a lot of people.
Since the start of our show, not just here on Stocktwits, but everything that we've done over the past few years, we've talked about how we look at our portfolio and we add to what we have. We rarely talk about how we evaluate new names or when we bring new names. I'd like to hear from you, Nick, on how you do that. Not that you're a little bit different. You're not long all the time, right? You're more of a trade in out type of guy. But how do you go through the process of evaluating new names that you want to buy that normally you're not?
So I've got several lists going. I've got like my master list, and then I have my go-to trading list. My go-to trading list is pretty much anything that's expensive. So almost everything on there is probably over 150 or 200 bucks. Um, the growth side of the names that I'm looking at, or momentum, I'm always scanning Market Smith. So when I reference relative strength, I'm typically referring to Market Smith's RS rating that it's giving a particular stock. In the growth 250, you can build relative strength scans out on Market Smith, but the growth 250 list also has an RS line making new highs. So a lot of times what I'm trying to look for is stocks that are the relative strength line is making a new high prior to price. That means what that's telling me is that the market's in a corrective mode or choppy mode, whatever. And it's not necessarily that price in this particular name is advancing, but it's holding up and at the very least building out a base prior to the market breaking out of some type of viable pattern.
Give me an example that I can look at.
Depending, I moved my other computer home for the summer, so I don't have Market Smith up here right now. But I can guarantee Palantir is probably one of them. I don't know that necessarily, so I kind of want to actually take a look when I get home. But from there, I'm typically setting alerts. So you can scan, let's say you're scanning Market Smith and you have your list like stocks that have already broken out and ripped, stocks that are basing. You're setting your alerts. And when you have a day like today, just unless you really have an affinity for some particular company, like who gives a fuck? Like take the first come, sorry for my language, like first come, first serve. Like the first to break out are going to move the hardest and fastest. If you're in a mindset that if you're on tilt and been getting chopped up, it's going to be very difficult to do that. You're going to want to let that first batch break out and let your secondary names kind of step in and start to break out. And those are the ones that you're going to want to grab. That or you're setting alerts on the ones that broke out the first and the fastest. You're setting alerts probably based on like hoping for a pullback in some capacity. So to answer your question, it's kind of a first come first serve basis, and I'm trying to catch the first ones in my favorites. Which right now, obviously, like I've said a bazillion times, is Tesla, Palantir, HIMS, and Lifetime Holdings.
We're going to get a T-shirt printed with GP's favorite phrase about stocks. We don't love them hoes, right? GP.
Yeah. So there's a lot that goes into picking stocks, right? Like, Nick, you have a different mindset than I do. Ben, you have a different mindset than I do, and other people have different mindsets than all of us, right? I think when you find an idea, and most of my ideas are manual. I could run a script. I don't. I love doing the manual part because it gives me a solid feel of price action, charts, and stuff. If you don't like
Yeah.
it, fine. Run a script, write a AI tool, do it. Awesome. More power to you. The manual part is what gives me the confidence, right? Because I've done the work. And so names that I think like let's talk about AMD, right? It's beaten up. Technically, it is really broken. So why add to it? Why not wait till it reclaims stuff? To me, it was getting down to I think what maybe 6 or 7 times sales for a leading sector. Um, it was just hated. It's down 150 points nonstop, right? And so there's a lot of other things that went into it, but I liked being long here. If I'm wrong, cool, it's fine. Is it going to go to 40? Sure. It can go to 20. It can go to whatever. Um, but that's an idea of an investment where the technicals suck, because my goal on investments that I want to be long is when technicals suck, not when technicals are fantastic. It's when I want to start establishing a position. It's where I want to be long in batches. We've talked about this a lot, right? And so I I I don't want to do it on the upside. You're a trend trader, great, that's awesome. But my investments, I don't want to be trading them in and out. I want to be holding them for long term. So I want to find things that are great stocks with broken technicals. That's me. And if you don't follow that, great, that's fine. Do what's for you. I don't want to be in and out every 6 months. I don't want. I That's not what I want. And um, that's just personally for me. And then I also look for new names with moving averages. Go to your 52-week high list, right? Go to your sector by sector list. What's outperforming? Okay, there's XLF. It's stronger than all of the names right now. So you should be looking at banks. What banks stand out to you in this mess? What's held better, right? So there's lots of ways to do it, but ultimately you got to do it. The work is an important part of the conversation, right? Because
Yeah.
a lot of people go to doctors for medical advice, right, and lawyers for legal advice. But someone who's been in the markets and they're giving you their opinions and thoughts about the markets for decades, you don't trust them at all. I don't think anyone ever trusts them, right? It's like, well, you should be giving out advice for free, and you should, if you're making bazillion dollars trading, you should be giving out market, right? So if that's your natural stance, then do the work, right? That's the part that's important. It'll give you a good foundation to move forward from.
For
Sorry,
me, no, that was great. I think it gives insight into the way we all do things. And for me, on AMD, for instance, since I've got that chart pulled up, it was easy. This is a name that I'm long. This is a name that I'm going to keep forever. And at worst, buying here in the 80s becomes a trading position eventually, right? And I'm okay with that. And I think everybody, whether it's technical or what your portfolio makeup is, or what have you, however you determine when you're getting in and when you're getting out. I think what I loved about your question most yesterday, GP, was you have to have a plan, right? You can't just wait for it to slap you in the face, because if you do that, you're too late and you have no plan. You're just basically reacting off of emotion, which usually doesn't end well, or you have no idea of what you're doing and you could get hurt.
I I jokingly say like you've got to earn your right to shoot from the hip. And like to GP's point, when it comes to doing the work, like that's what comes from doing the work. You have days like today, or on the flip side, you have some of these like gap downs that just absolutely flush. Like the guys that really capitalize and catch those moves are they may not always be the best prepared, but they've done the work over the long haul. Like they know what they're looking for, exactly what they're looking for, and shooting from the hip is just second nature. So, seat time. Seat time.
Yeah.
Seat time.
Seat time, and when you have seat time, you pick up on nuances and patterns and names, and we've talked about this a lot of times too, which is personalities. Every stock has personality. It is
Yeah.
a constant occurrence. You know why? Because the owners of every stock are different. And so different owners, for example, some people love using the exponential moving average. Some people love using the simple moving average. So certain stocks behave better on exponential moving averages, certain behave better on simple moving averages. So the time is to understand how a lot of this stuff looks and feels over time.
And some
There
people
was
use
a
DMA, whatever the hell that is.
counter trend trader on Stocktwits, and I don't remember his handle, but GP, he his entire strategy was based around taking his basket of stocks and finding particular moving averages that every one of these stocks kind of like really respected. He didn't put a trade on until that behavior changed. He used the moving averages to kind of identify the personality of each particular
It's
stock.
really important.
Yeah.
It's really important, right? Like Netflix is a long-term 30-week moving average person, right? Like stock or whatever. Um, Not everyone is 30 weeks. Some are 40 weeks, some are 50, some are 55. Um, you got to do the work. There's literally, I have in Thinkorswim, I have something, they create something called sets, right? And the sets, I created all these different scripts by moving average, right? So I have it starts at 3 and works all the way down to the 450-week moving average or daily moving average. I've created that many scripts and they all go in this one bucket. So on the weekend, the work I do is throwing all of those on a weekly chart, a daily chart, and see what's going on, right? See what's held and stuff. And I don't need to do that as much anymore because I've been doing this for a long time. But when I first started, that's exactly how how I started to understand how things behave differently based on the ownership. That's just me.
Guys, we've done it again. We've run out of time. We're at the cap. We're here.
Are we
One
waiting for a
last
tweet to
thing.
die?
One last thing from each of you.
Hey, yeah, I do. I got a shout out to Ben. Hey, if any of our listeners are musicians, we've got Mother's Day and Father's Day coming up. Our homie, Thelonious Stonk, is an author of a guitar book that is on Amazon. So go give him a follow if you're looking for some, guitar lessons or
A tremendous bass player.
Yes.
Oh, nice. I have a guitar. Maybe I'll grab the book and start learning guitar again.
Thelonious Stock. It's our boy Jason.
Yes, sir.
GP, last words.
Sorry.
I got two. First, use Stocktwits in the way that it's the most powerful. There is a ton of information. There is a ton of features and things that they offer that other communities do not. Get on, get involved, be a part of all the things that they offer because they only help you create a better foundation. Been there a little over 10 years now. I stand by it. I'm still posting there 10 years later. So first thing to do, use it as a log. Go back and check your work. See what you missed. See what you didn't. We will always make mistakes. Doesn't mean they have to be unlearnable, so to speak. And second, get ready for the Baba trade.
The Baba trade.
Yeah, so we called I think I called the June 120 calls at the beginning of the year. They went close to 2,000% on the final batch. Fantastic trade. was waiting for this pullback. We are setting up to get really long here because I think the start of a really big wave is about to begin in Baba, and from here to I think 180 to 200 will be the first kind of move out, and once it gets to that 180 to 200, it's going to get a lot choppier. So I think you can I think you can definitely get long. Look at the weekly, dude. The 50 curling over the
Yep.
200. The weakness into it. It is. This is what I've been waiting for. It's taken a lot of patience, but this is what I've been waiting for. Got to the levels where I want to. I would really still like to see 94, but obviously today's tweet kind of changed a bit of that. So
I love it.
time to raise this.
I love it. I love it. I may have to put a little money to work in some Baba. I love it.
Yeah.
I'm looking at this from a options perspective because I never trust China as far as I can throw them. So I don't want to put that kind of capital to work. So I'm going to use options to do this. It's going to be either January or March leaps at this point. I'm looking at 150. I'll post it out because I posted this before too. So I'll post it out again. Your own money, do your own due diligence. You don't have to follow. It's just something that I'm looking to do, and if you want to ride along, either in pain or in glory, you're more than welcome to join.
Please do not hold your options till expiry.
Yeah.
Please do not do that. This is not financial advice. This is this is life learned, hard learned lessons. Do not hold them to expiry.
Unless you're
My
going to
last
get deep in the
word.
money.
Sorry, GP. Go ahead. I'm sorry.
Unless you're going to get deep in the money. That's all I'm saying. Out of the money options, yeah.
My last words, the two top names on my watch list. If we can expect more tariff madness, I like the Dollar General store as a play for less expensive items. Chart doesn't look great, but I like the Dollar General store. If we are somewhere in between, I like Reddit. Not for the same reasons that GP espoused everything on Stocktwits for its community, but you can literally find information about everything on Reddit and people who are actually doing those things. So I think that is of some value to a lot of people in times that are uncertain. So I like both of those names. That's my last words. Guys, it's always a pleasure. I love you both. GP, I'm glad to see you got a little bit more of a smile today than you have previously. Nick, we can't see your smile at all, but I can tell you're grinning because your eyes get really squinty. I love you guys. Thanks to Keith and Max and everybody behind the scenes here. We love you, and we'll be back next week for Stock Community Rip Live.